Michael Lynch is the president of Strategic Energy and Economic Research. He joins us on the phone from Amherst, Massachusetts. Michael, great to have you here with Matt and myself. Adam just kind of laying out the scenario in terms of the companies that are exposed and so on. When the market starts to sort out what's going on in Libya, how do you think the energy markets will ultimately settle here?
Well, I think we're going to see a significant boost in prices as long as the situation in Libya continues to see violent unrest. And any problems that appear in Iran or Saudi Arabia, I think, would cause prices to go higher. So it wouldn't surprise me to see WTI at 110 before the end of March, say.
I mean, Michael, isn't that what we're really worried about? I mean, I think we were talking earlier about Libya, about, what, 2 to 3% of the global oil output here. But we're really worried about what happens in Saudi Arabia and some of those that are much more important, significant to the global energy market.
Yeah, the oil market has something to fear besides fear itself, but fear is a big factor. The Libyan oil is high quality, and that counts a lot, but it's not that much. It's much more serious if the problems spread to either Iran or Saudi Arabia.
Somebody emailed me earlier saying, look, here we have a murderous dictator leaving the scene, hopefully. Shouldn't we be happy? Shouldn't we be rejoicing? Markets, of course, going kind of the other way here. Is it better for the market if these dictatorships are taken down and these oil-rich countries are turned into democracies or not?
I would certainly say so. A great example was the 1990s in Venezuela when you had a shift towards economic reform, oil production boomed, and that's part of the reason the price collapsed in '98. So I think if you see political and economic reform in Libya and a couple other countries, yeah, you'll see a lot more oil coming out there, as well as hopefully economic growth. I like to think of these as potentially falcon economies.
Let me ask you, Michael, about Saudi Arabia. Obviously, we're all focused here on Libya because of the political aspects of the story, but the market's looking ahead and more concerned about countries like Saudi Arabia. From someone who looks at this country from the perspective of energy security, what's the story there?
Well, Saudi Arabia, I think, is a much more stable society. It is a monarchy. However, they're much more in touch with the people. The biggest concern is always that they have so much oil that, if Libya gets pneumonia and Saudi Arabia gets cold, we're all in big trouble. So that it's the volume we worry about much more than the political situation.
How likely is that to happen? I mean, Michael, you guys have got to be watching all of these developments in the Middle East. How likely, from your sources and what you're seeing, that Saudi Arabia runs into trouble here?
I don't think it's very likely. I mean, I have some articles from the late 70s saying, Iran has fallen, Saudi Arabia won't last a year. And people there always laugh about all the predictions of the downfall of the House of Saud. The point is, it's a lot more closer to a cooperative republic, I guess, than a monarchy. So in that sense, I don't think there's a lot of difficulty facing them in the next few years.
What do you think about the situation in Libya? I mean, as those of us who didn't know already are now learning, Gaddafi had sort of taken the oil from the east and was putting the money back to his new capital in Tripoli in the west. Do we see certain tribes in charge of the biggest chunk of oil there if it falls?
Yeah, that's a good question because, you have other places like Nigeria or, if you look at Alberta in Canada where there's a lot of resentment at the way the resource money flows from one part of a country to another. And given that you don't have a strong civil society in Libya, that is a lot of national organizations developed the way you do in most modern countries or even Egypt, you do have to worry that things could disintegrate and you could actually see some squabbling over the oil resources.
All right.
Hey, Michael, thanks so much for joining us. Michael Lynch, there, Strategic Energy and Economic Research.